they are. So another thing I learned, in addition to all the stuff I told you before, like it'll help. Like,
well, hold on. I hate for you to get to talking and then the questions get to answering. Can we mic you up?
Right now?
Yeah, right now.
Jesus Christ, I ain't got my.
Man, you good. All of this? Well, peer pressure. A friend of mine actually, he was doing well at it, and he was like, there's not a lot of people that look like us doing insurance. So he was basically like, hey, you talk a lot of junk, so you should probably look into getting into insurance. And I was like, nah, this ain't for me. You know, I'm an engineer by trade, and I'm working in a field where I had like a lot of free time and a really set schedule, and I was kind of used to that, and I was making decent money. But I'm also a travel junkie, so he, long story short, he did so well at his job, State Farm sent him to Africa and Spain in the same month. So I was like, hey, they did that for free? He's like, yeah. So I was like, all right, let me at least hear what you talk about over here. You know what I mean? You ever seen Wolf of Wall Street where it's like, you showed me your check for $70,000, I called my brother. All right, yeah. That's basically it. And then I took the interview. You know, the rest, I would say the rest is history, but it's a lot of like drama. As you can see, it's always something going on in my agencies. That has nothing to do with insurance, but that's pretty much the story, the short story.
What is something you would, like, advice you gave to somebody that wants to be doing this type of business?
This type of business? First off, make sure you have a passion for it. Intern somewhere, because I came external. I didn't have any like knowledge of how much it takes to run a business like this. Intern, see if you like it. Be flexible, and just start from wherever you can get a foothold in. Once you start in it, you'll start to see it. You'll be like, either right away you're like, I love this, or I hate this right away. It's one of them fields where you just like, oh man, this is crazy. We get to help people, we get paid to do it, we get to build legacies, and you see people, their lifeline evolve right in front of you. So you'll learn right away if you like it or if you hate it right out the gate. Like,
what that means, what's your favorite thing about it?
I don't like repetition, so like this is different every day. Like some days you're just here doing tedious little work, and some days you helping someone on the worst day of their life, like their house burned down or a relative dies or something like that, and you get to be their hero for real. Like it's crazy, because we had an account like in Richmond where a storm basically destroyed his house, and it was during a time where everyone was having storms, and the guy was just really low-key, like talking to me like I'm talking to you, calling, and I had like 300 other people calling because they got limbs on the house. The limbs be the size of, you know, your arm, and they're like, oh man, the sky's falling. And I'm like, hey, yeah, we'll get to you, because he's talking to me like this. Then I'm like, hey man, he called like later in the day, he calls again. I'm like, hey, what's going on? Then he calls again, and I'm like, just like, but he's talking like this. And I was like, hey man, send me a picture of the tree on your house. And it was the biggest tree I ever seen. I mean, it was like this wide, probably easily 100 feet tall, fell on his house. I'm like, bruh, I'm on the way. Like, yo, you gotta talk to me with some bass in your voice, but he's just a humble dude like that. But when I get there, it's Friday, it's like 3 o'clock, I gotta go to Richmond. I show up, his wife runs to the car. She like, oh my God, thank God you're here. And we're one of the only companies that you can cut a check right there on the site. So that was a good feeling, because then the neighbors saw it. They're like, dang, your agent really got your back like that. And they were all kind of in similar situation, not as bad, because the tree had split his house basically in half. And you couldn't live there. They had to get a place to stay while people came out and fixed it. So that was a dope moment. Those are stuff I always remember. And I had a lady, her house, front of it fell off. Like, I never seen that happen, like due to a fire. Just being able to be there and taking care of people is the best. The least, oh God, when someone's bill goes up or down and they just want to talk to me, and I'm like, hey, I pay people that can do that. They're better at it than me. And they're just like, nah, I got to talk to you. Your name is on the door. And I'm like, when do you go to McDonald's and talk to Ray Kroc or Ronald for that again? Like, if the prices of burgers go up, you ain't talking to Ray. You just going in there talking to the people. So it comes with the territory though, but helping people like establish a foothold in life or recover. It's kind of like
What's the most challenging thing that you have to deal with so far in your life running this business?
this running this business. Staffing. Everybody's unique. Everybody, and I've had to change my comp plan a bunch of different times. I've had to learn different character types and how to work with them and how to keep them motivated. Everyone is driven different. Some people are driven by money, time, influence. It's a bunch of different things that people do. So you have to kind of learn each person's character type to see how to influence them.
So I'm gonna ask you, they're not getting to the meat and potatoes fast enough.
Go ahead.
Talk about wealth building and insurance.
Wealth building with insurance.
So, and I say that because they are seeing the real estate side of it, the buying and selling, but the insurance part, because real estate is tangible. You can touch it.
Yeah.
A lot of people don't understand the insurance part because I know until we sat down and talked, I was like, holy shit, I need some of that.
Yeah.
Right? So let's touch on some of that.
So a couple different policies, like people don't really think about life insurance for themselves. They think about, I'm about to leave some money to someone or ex-wife. There's a lot of things you get. I don't want my wife spending money with someone else without me. But what I teach people is most of the policies are designed for you. So a lot of times you can take a policy, you extract the dividends and live your life on that. So it works kind of like most life insurance policies that are set up for whole life work like a high yield savings account. So you still have access to the money. It builds in the background. The more you invest, the more you get out, of course. But you always have access to the capital, where it's like in 401ks and different other savings vehicles, and they tax you.
Let me pause you real quick. The demographic you're talking to is 18 to 25.
18 to 25. Look, get in here, get something on yourself right away, because your health is what qualifies you for life insurance. So if you can be 24, and if you got bad health, you're out. You can't get it. You can't start it. So get insurance before you are unqualified. If something happens to you, you break your leg, life insurance is going to cost you more. You get hurt on a bike, it's going to cost you more. You get something that is, God forbid, you get something that's life-changing or life-altering, it's going to cost you more, or you'll be ineligible altogether. So 18 to 25, definitely look into it now, because you can always add to it, change the policy, and it'll qualify you based on your age now. So whereas if you're 18 or starting out, the policy be $20. You come back to me when you're 30, the same policy is going to be 50. And just throwing out numbers, but that's basically the concept of it, because you're that much older when you start the policy. Also, some of the policies I write, they have a year limit on it. So for example, it's called a limited pay. You can select it for 10, 15, or 20 years. Once you pay those years up, it's done. So if you started when you're 20, 35, you can use it as part of your retirement. You can use it as a retirement. That's what I do for a lot of business owners, because we don't have a traditional retirement plan. So we'll set aside, we'll take funds from their business, invest it in a life insurance policy, and then the policy builds while they age, and they can go take money out, they can take a loan against it. You become your own bank. I know a lot of people are hearing about, becoming your own bank. Well, this is how. You take the life insurance portion of it, you take the dividends, and then you either make the bank compete.
So the reason why I said 18 to 25, what's the dividend?
Dividend, let me go back. Dividend is like interest, but you don't get taxed on it.
Right.
Simply put.
Now, so because I explained that to my daughter and a lot of people, money all works the same way. It's just when they don't want you to know, they change the term of it and make it sound more
complex.
So then what's high yield?
High yield
before.
So high yield is another thing. So think about a savings account back in the day. Let's not date ourselves, but back in the day, you can go to the bank and get 8-10% on a savings account, or a CD would be 8-10-15% back in the day, depending on how far you go. Now you'd be hard pressed to get 1%. And that's what we checked one time. Well, now Apple's kind of doing, some banks are doing 4%, but you have to invest a lot to get that. Whereas a high yield dividend account is going to, on average, give you 8 to 20%, depending on how good the company does. So the company does well, being that we're a mutual company. Mutual just basically means it's owned by the people. So it's kind of simple. Stock companies are owned by the stock board. the board, and they kind of make decisions for it, whereas we make decisions for the people because the people are ownership. So when the company does well in a mutual company, every part of the business does better, and they pay out dividends as a result. So those are kind of it's a lot more into it, but those are the broad definitions of what you're to get people. You don't want to get too deep in the woods with dividends and stuff like that when people don't understand it, but that's the basis of it.
So you talked about your own bank, creating your own bank.
Yeah.
And I'm pretty sure that on TikTok, they probably seen it as like, what's this dude talking about how you create your own bank?
It's crazy.
Can you explain that? Because I know you
absolutely.
explained it to me. I was like, I need this in my life.
Right. So becoming your own bank is easier said than done. It takes a lot of discipline, but you can take a sum of money based on your age. It's lower for everyone as you're younger. You take a sum of money, you put it in whatever account you choose, whatever kind of life insurance policy you want, and depending on how you front load it or fund it, the dividends will pay out greater. So as the dividends pay out, you can take money out of your account without it subtracting from your account. So it's kind of difficult to explain, but say a savings account or a 401k, you got 100,
any savings account, like your personal, or is it like your business?
Either one. You can do it. You can do life insurance on pretty much any one of those situations. But if you simplify it, if you take a checking account, you have $100 in there, or let's do savings account. Savings account, you got $100. You're making 1% interest. When you take out $20, you now have $80. You're making 1% interest on $80. Whereas my policy is the life insurance. If you have $100 in there and you're making 1% on $100, you take 50 out. You're still making 1% on the 100. Mm-hmm. So there's rules for why that's true, and different policies of a lot different amounts that you can do that. But that's basically the concept of it. And then you just grow the policies, and as they age or mature, then that's how you're able to take money out or make the bank compete for your business. But if you got 50 grand sitting in your own account with your name on it that's attached to nothing, you can say, hey, I need to borrow. I got some construction I want to do, or I want to buy a car, and you got $30,000 sitting in there at a fixed rate that the insurance company is going to give you. It's usually 4 to 5%. Then the bank's got to come in and be better than the 4 to 5% because they already see it. Yeah. And then when you go to do building stuff like this, or big stuff like Carrie does, like big baller stuff, they're going to also ask for your PFS. A PFS is a personal financial statement. It's basically a statement of your assets. Right. So when you can use your life insurance as an asset and just say, hey, it's worth about this amount, so you can leverage that too. Okay. So when you're trying to become your own bank, how you tie it to that, you can be like, hey, I'm a safe bet because I have $30,000 you can take if I default on this loan, or whatever you're trying to do. Or it just basically, it mitigates the bank's risk. Banks are always risk-based. They're looking at what they can take should you default on a loan, or should you have an issue paying. What can they take from you? And most of the time, people only have a certain set amount of assets, a house, a car. So if we all stacked up together, me and Carrie are going for a loan. He has life insurance, I don't. We have the same. We live on the same block, same house, same cars. Everything is the same. We work at the same place. But he has whole life insurance, and they got one loan they're gonna give out. They're gonna give it to him every time because his money is backed by something more than mine is. So that's basically how it works. And as you aggregate the dividends, you can take more out, you can put more, you can diversify, you can use it to buy more life insurance, which is what a lot of people do. Take a dividend out, buy another policy. Now that policy is working, then you can pay the other policy back. It's a lot of different plays you can do with it. And it's very exciting when you get really deep into it. And a lot of people are talking more about it because, it's becoming like more popular. So the policies are starting to change as a result of that because of this.
So you mean to tell me State Farm just isn't car insurance?
Nah, bro. No, I don't even write car insurance myself. My team does it. I do financial advising, and I do the life insurance, man, and business insurance, because they kind of tie together. Okay.
That's a lot of information.
Yeah.
So what's funny is it sounds boring but it's exciting because you can see your money grow. Not like how you've been taught before in the past. So it's not how I was taught in the past. So it's
Well, who
fun
taught
to
you?
hear. Well, my parents. You know what I'm saying?
Well, who taught them?
Their parents, right?
And who taught them?
They probably taught
Let me tell you what. If you really do deep, and I don't want to I'm gonna blur my face out for this part. I'm not the same dude. The education about how to invest, if you go a couple layers deeper, most of the time it's financed by a bank. And if you notice, if the bank is telling you, hey, that they had this big thing back in the day, buy term, invest the rest. Everyone says that, but the guy that came up there was a banker. So why would you do that? They're being, because if the more you don't know about insurance and diversify different products that can get you the same result, you're gonna go to the bank. You're gonna take the 2.00002 interest rate on a savings account rather than come talk to me and do a life insurance policy. So it's a cycle where they try to keep you needing them. If that makes sense. Nothing against banks. You need banks for certain things, but the core concepts of it, when you can become your own, it's a different vibe.
Right, because now we're talking financial freedom instead of financial bondage.
Right.
Because the bank always wants you to come back.
Exactly.
Okay, so if I get like lump sum of money and I want to invest,
That's a great question. I see where you're going. This is a great question.
Okay.
I can just get a life insurance policy and grow that money. That's what you're
Yes.
saying. Essentially.
Absolutely.
And how's it taxed?
Yeah.
I'm sorry. What?
See?
I'm gonna say okay.
I'm sorry. What? So you can get involved in higher level stuff that will be taxed, but most of the time those are very complex policies. Most of the time, if you're getting a large sum of money, I'll show you how to avoid taxes because you already paid taxes on that money.
Yes.
So why you want to pay double tax?
Right.
So why you gonna put it in a bank account or whatever that's gonna 1099 you at the end of the year?
You got a card.
Yeah, absolutely. Got all the types of cards. Make sure you get one. So, like, that's
See, he got
kinda-
cool cards too. Listen,
You know what I'm
he out here
saying?
shining real hard right now.
So,
No, because listen,
Yeah.
can't see me with my pop will be like, oh, that's cool.
Yeah.
So now I come over here, you giving out poker chips like, oh.
yeah. That's how we do, man. Like, and we just teach people a better way. I mean, don't get me wrong. Don't go take all your money out the bank because you'll need a relationship with a bank as a realtor.
Yeah.
So you definitely want to just diversify, and that's what they mean by diversify. Like you
Exactly.
put money in different places, see which vehicle goes the fastest. You don't want to put all your kids in one car, so to speak. So
Okay.
it's kind of how you do it.
Mind blown?
Yes, it really is.
It
Daughter
helps.
got bored.
I got
That's
hold
something
on.
I've been trying to find out how to invest.
Yeah, it's different ways to do it, and like what we teach people from. I mean, I literally did one today, a life policy that was like $8 or something like that, but it's a starting point. And then I'm set the precedent like, hey, I don't mind doing this, but we're gonna have a conversation next year and every subsequent year because your life is gonna change every year. So we need to basically have a conversation on the anniversary of this and see what changed in your lifestyle so that we can increase the policy or change it to meet what your needs are.
Okay.
Especially if you have kids.
So check it out, Corey. I'm 25. I'm single.
Okay.
Running the streets. I don't make a lot of money.
Listen.
Why should I do life insurance?
Listen, I'm gonna tell you a story that is exactly the truth. All right, so my guy that put me on, he comes to me. He's like, Corey, you making money, you doing whatever you're doing, you hustling, doing all this. He's like, sit down and talk to me. I'm gonna show you some stuff. And yeah, I'm like, bro, I don't have time for this, man. Like, I don't.
You trying to sell me some
You trying to
guys?
sell me something I don't know. I'm trying to buy these sneakers and buy motorcycle parts and all the stuff that I don't even have anymore. Yeah, it's a whole thing. So I'm buying all the stuff and he's like, man, give me, $500. And I'm like, bro, I ain't got $500 a month for you. And he's like, all right, man, give me $300. I'm like, man, listen, I'm gonna be honest, I ain't doing that. He's like, all right, bro, I ain't got time to go back and forth with you. Give me $150 a month and don't ask me no question. And I said, all right, man, if it'll get you off my back, I'll do it. Fast forward, he wrote me a a universal life policy back then. And this wasn't even the big dogs. The big dogs used to get like 30% interest, dividend. This one is a light one, but it's been consistent. I wrote that in, 2011 or 12, something like that. So I forget about it. It's running in the background, just like crazy. And I was like, damn, you know what? How much money do I got in that thing? I go look in it, and I got like 20, 30 grand just sitting there.
And how long were you doing it?
This was, at that time, I had it for like 4 or 5 years, something like that.
So 30 grand in 4 or 5 years.
Yeah, just sitting. I forgot.
$150.
$150.
Okay.
So I just forgot about it. And I was like, let me just let it sit in there, because I don't really need it. You know, I'm making decent
So did
money.
you stop making the contribution?
No, I kept it
Okay.
going. I was like, listen, hey man, that's good. But what it did help me do, and you asked me how we got here, when I started my business, I didn't have any business credit. I didn't have any credit except my personal credit. So a lot of times they'll make you do guarantors and stuff like that, use your personal credit to finance your business. But because I had this for like 4, 5, 6, 7, maybe 8 years at that time when I started my business, they were like, oh, that'll back you for what you're trying to do. We'll give you a loan for 50 grand to get started, 60 grand, because it's backed by, you got whatever 40 grand in capital just sitting there. So we're good. And I'm like, what? And then I'm new to the insurance agency, insurance game at that time, and I was like, damn, what is this policy? I started looking at it. I was like, oh, I can contribute more to this? Thank God. So I went and just started adding more to the policy. Then I built policies around my lifestyle. Like, I want to retire early. I'm not trying to be out here, 70 years still trying to hunt down leads. So the policies I wrote, they basically time out at certain times. One is timed out to, so something happened to me, it takes care of this building. This building will be paid off, it stays in my family name. The other one's timed out to pay for my house. So something happened to me, it pays my house stays in my family. All of them are designed to do something different. And that's how you want, when you start talking big stuff, like you have assets, the worst thing you can do is pay for a house and then give it back to the bank. You done paid 29 years. You got 1 more year left on the mortgage and you passed away. Bam, it's gone. So I teach people how to keep assets in their family too. That's a big part of what I do.
So the next part to that, because I'm glad you brought that up, we talked about 25, right?
Mm-hmm.
So.
Oh, that's why I brought it up, because I was about 25 when he told me to do it.
So now let's compound that with, how do you compound that with your trust?
The trust is something I'm new to, but we actually getting ready to do a trust class week after next. Trust.
That email?
I haven't even built it yet,
okay.
But I'm gonna get to it. Trusts are very complex, and like I have to bring in an expert to do it. But they basically, the concept of it is you can put a lot of your assets in your trust name, and because, and don't get me to lying on camera, but basically a trust, the way they work, the general, what I know about them thus far is that since they're not a government, the government didn't build it, that's how they can't tax it. So from what I'm learning about them, they're like, basically they're outside, they exist kind of outside of the business space. They're like incorporation, but without the government involvement. So it's a pretty wild concept. So you can put a lot of your assets in trust and keep that stuff inside the family as well. There's some, like when you start getting into high level finance, there's so much stuff you can learn and just school of the game. Like I'm actually reading this book now. I just got this book.
Hold on.
Yeah, extra.
What's the book that anybody call this stuff? What's up?
What's the book reading?
It's right here. This is it's new to me, but I learned about this. This dude is a beast. He does what I do on a higher level. Like this guy's a genius. He incorporated his family. So, and everyone's a board member in the family. I'm like, wait, what? So like every time when you get into like insurance or high finance, you learn something. You're like, that's illegal. It's not. It's like, it's built for people that understand the code. It's like a cheat code. So as soon as the people that are in it, that are playing in that space, they're not going to tell just anybody. They're going to tell their friends first. They're going to tell
family first.
Their family, friends, and get everybody that they care about in it first. And then they teach people, and then they charge other people. So I had to pay for this. I won't in the family. So I'm learning, and it costs you money to learn, but it's worth it once you start figuring out the plays you can do, because there's a lot of money to be made and a lot of money to be lost by being ignorant to it too.
So do the policies, like, is it just like shaped around the individual?
Yeah, I build them to meet, first off, a budget, secondly, the goals, and thirdly, to be able to grow with the person. So however you need it to look, you like, I got 50 bucks. I'll make you a policy for 50 bucks. It's important to our agency. Like, my agency does very well as far as cars and homes. I don't have any problem in that. But what it does is not reflective of me putting families at ease. Like, if someone should pass away, that's what I'm passionate about. Is we write a bunch of home and auto policies, not to brag, but we do. And if my percentage doesn't match that, I make my team slow down on that and focus on life. Because the worst conversation I've ever had is when someone died. Hey, my dad had all this stuff with you: houses, businesses, cars. Where's this life insurance policy? And I'm like, hey, we don't have it. You know, that's a tough conversation to have. That's probably one of the other worst things I have to deal with, is when people call and be like, hey, I don't have life insurance. Your dad didn't have life insurance. And now all those things he may have had and maybe close to paying off or close to owning, the lifestyle is going to change, like, altogether. Like, it's tough. Like, I got a case that we were just dealing with like about a year and a half ago. Like, the lady and her husband, they were literally in my office one week. He passed the next week, and then her whole life subsequently has been downhill because of lack of preparation. And I mean, just imagine being in your house like 20 years and then their breadwinner dies, doesn't have enough to cover a lot of the stuff. So now you lose your cars, your house, and different things like that. It's
slowly too. It's
not
all at the same time.
Yeah,
Slowly.
It's just a bad space to be in. So that's why we try to. I make my team ask. I always ask. Where's your life insurance at? Who do you have it with? What are you doing? And it doesn't make sense for you. That's kind of what we're doing. So. Anything else?
How old were you when you started this?
Oh God, I don't even know. So.
Well, listen, your preference 25 is being.
25 is when I got that policy, I think.
And you said you were about
I've been an agent for 6 years. So I was 36, 35? No, I was 34 turning 35 because I had a year prep prior to it. I was like either 34 or 35 when I started.
So how long have you been in the business?
6 years.
So this is a cool thing, right? Because I've been in the business 5 years. He's been in 6. And to see where we're both at as owners, it's funny because a lot of people think it takes a lot longer.
Yeah. It's all, and the thing about insurance, man, is it's all self-paced. So like, if you want to make more money, you make more calls. And it kind of ties in with real estate. It's however hard you want to hustle, is how much you'll benefit from it. It's a direct correlation. It's like, as much as you get out there and you make your name and presence felt, you will definitely benefit from it. A lot of people want, like agents, you'll find a lot of agents, once they get to a certain income level, they just don't even show up at the office anymore. And that's their right. They made the kind of money they want to make, they can hang. But younger agents that are hungry, they're out there trying to make the calls, make the sales to benefit the future of them. And that's just kind of how it goes.
Diggy said treat every day like its first day as an intern.
As Diddy's first day as an intern. That's
what
exactly
he said, right?
it. Yep. So, and you work, and I work, late hours sometimes, but it benefits everything. Like if you put work in, it'll pay you. It's not always instant, but you'll see over the long term. So.
How long did it take you to see like some real good revenue coming?
3 years. Year 3. Every agent you talk to, they're gonna tell you. First year, you like, oh God. Second year, you I was calling my old job like, hey, big head, you hire anybody? Yeah, let's go do lunch. And then year 3, you start getting into your own flow. And then once you get your own flow, it's good after that. It's pretty even. Like, yo, oh, this is how it's supposed to feel. And then year 5, it just punches you right back in the face. I don't know why. It's just an insurance
So
thing.
it's the same thing in real estate.
You get a good flow going, and as soon as you're like, I'm cooling, and nope, you start over.
So if you go back and talk to Jordan hit 3 years, right? And you heard him talk about all the closings he has coming,
Yep.
right? Year 2, Jordan was ready to be out of business.
Yeah.
I had to sit, hey, listen, bro, just keep making the calls. Nah, man, I'm tired of this.
Yeah, man.
You know what I'm saying? And
Year
you
2.
hear him today. Oh, man, yeah, I got about 9 closings before the year's up.
Yeah. It's just timing.
Right.
It's just like it's due diligence and paying dues. Like you'll be out here. I was doing like events every time and postcards. I was sitting here 8 o'clock at night my first year. Like, I've made a bad mistake. I need to call my whole job. I need to get back in something because this money is hitting different. Like, and then you like year 2 is kind of the same, and then year 3 you kind of find your legs. But my team members, they're successful due to my mistakes a lot quicker. But agency, it is a monster.
What did you do to maintain? While you
During that time?
Yeah.
I don't know. I can't remember. It's all a blur. I don't know. I made lifestyle adjustments, to be honest. I got used to living off of, I was making 6 figures at my old job. Then I got used to living on 20 grand. I'm gonna be honest with you. My first year, I was like, with payroll expenses, there's a big change. So I made adjustments, and now I know, like, if I get back down, I'm good. You know what I mean? I know how it feels to have your ribs touching, and how to just make it work with a little bit of income. So I lived off that, figured out my plays, and I was like, look, I gotta hustle. I'm in this hole. I gotta get out of it. So then I just started doing more, having more conversations, having more events, and just having a bigger presence. And then, the rest is kind of history.
So before we wrap all this up, I know you got tons of questions, but me and Corey could do this for hours.
Yeah.
We have a whole podcast that hasn't been published because it's that long. Right? It's something unique about you, right, is your location.
Mm-hmm.
There's no other real estate, well, hell, it's not a real estate company down here either, unless they just came down here.
Right.
There's no other insurance company down here.
By design.
And you are the number 1 in the area, right?
Well, it changes. Like, I have been number 1.
Oh, so you're pulling back on me?
No. What happened? Like since our interview, like, I opened a second location.
Right.
I took a little time out of it too, and like we had some agents that are hungry. Like they see a void, they're gonna go after it. So it kind of changes. I'm still top 5 in the district of 55 of us, so I'm not complaining. It's just there's a lot of hungry people out here, but location is everything. When we first started out here, everyone thought I was crazy because there was no one down here. I'm like 3 or 4 miles from the closest agent, and State Farm agents are usually every corner like a McDonald's. So I was like, let me position myself to be unique, like you said, and bet on the future, because I knew I'm coming down here. I'm like, ain't no agency down here, ain't no people in the strip mall. Something's coming. So I'm like, I'm betting on the long game, like something about to happen, because this is waterfront property down here, and there's people out here, and as a real estate agent, whenever there's low income near water, people coming, and they gonna gentrify that whole area. So that's kind of what I bet on, and the long game is really paid off. Like, you gotta be, but when you in that first year, you're like, oh, I messed up bad. But and now I look back at it like, dang, we really got a foothold down here, and we do right. Not that we're the only game in town, but it helps being on an island by yourself when you're building something like this.
Okay.
So I bring that up because a lot of times I hear people saying, well, don't bet on our people because our people gonna let us down.
Oh, nah, bro.
And you hear that a lot.
Nah, don't
And
ever
so remember when we was looking at that house, I said, I'd rather be me or somebody else. Let it be me, right? Because I can control what's happening out here. So I feel like we shouldn't run from our people.
No.
We should definitely be there to help, because the biggest thing with our people is they don't have enough information.
That's the key. That was another big reason I wanted to be down here, because this is the biggest employer in Virginia at that time. It may be something different now. Biggest employer, then 2 blocks over, the lowest income. So there's a disparity there, and if you can teach 5-10 people what I'm teaching you now, then they teach 5 and then 10 people. Now you have a different dynamic on the household market. You can change the demographics all the way around you just by doing small things like that. And like you said, you take care of people and they're gonna take care of you. You come in, you match the energy. You like, hey man, all my customers, a good amount of them I know them by face and name, because they come in here, they spend hours with me, they tell me what's going on in their life. They tell me, hey, I need to do this. I need to get from here to where you are. And I'm like, this is how I did it. And then I just give them the plan. And some of them stay with it, some of them don't. But I've done my part. I can sleep easy knowing I've done my part.
One last question.
Go.
You got one last one? Yeah. Because we could do this for hours, I promise.
Yeah, we have done this for hours. Get some bourbon involved and we'll be at it for a day now.
Speaking of which, I got the 50th edition Hennessy with Nas.
I was gonna get that, but I was like,
I just got.
Is it tasting any different? Or is
I
it
didn't
the
try it
bottle?
yet. It just came today.
You said what?
You got 3 bottles.
Oh, I was gonna
You
order
want
that too. Yeah, give me one. I'll take one.
Yeah, I'll make sure I put one in the car for you.
Yeah.
What's one of your goals this year
Goals this year?
in terms of business?
My goals are, I already hit my goals. My goals are for my team now. Like, to be honest, I want to see my team hit their goals. Like, one of my team members, he told me his goals and I told him a plan and he did it. And now he's where he should be. He's like 27. He's got a house, good job, company car, all this stuff. Doing well. And now he's trying to grow into the real estate multi-property space. So I talk to my team every year. I'm like, they have actually this Friday, I'm glad you brought it up because I almost forgot. They have to submit a business plan to me. It doesn't have to be elaborate, but they have to submit me their business plan so they can tell me where they want to be, what they're doing, what they want to see next year. And then I keep them honest about it, because I tell them every time, I'm like, I can chill and I'll be all right. But I need y'all to be good, you know what I mean? Because y'all are going to keep the lights on when I do decide to get lazy and stop hustling. Y'all going to be the ones on the front line, so I got to make sure y'all are well paid and well immersed. And what better way to inspire someone than with their own plan? So
I
that's
have
my
one
goal.
question.
Go ahead.
What's your 5-year plan?
For this,
Like in general?
5 years from here, oh God, that's tough. 5 years, I want to own a bunch more commercial spaces. I want to be able to play in that space without worrying about money. I want to, again, make sure my team is good. I want to have, at 5 years, I want to have like a 10-year employee. You know, I want to have someone that's been with me the long term. They're compensated right. They don't complain. I want them to bring in the next fleet of people. There's been talk about a 3rd agency. I haven't even got my mind around that yet, because the two are just killing me right now. But that would be something I would love to take on. I love to have a 3rd one, because you know, I just like getting kicked in the face. So those would probably be my only ones, to be honest.
Y'all good?
Yeah.
Appreciate you, brother.
Yeah.